Hello, my name is David O'Kelly and you're very welcome to KPMG's podcast Capital Ideas. This is the podcast where we speak to investors in Irish business. Today I'm speaking with Thomas Davy. Thomas is a founder and partner in Erisbeg, an Irish private equity firm focused on Irish SMEs. Thomas, you're very welcome to the podcast.
Thank you very much for having me, David.
Thomas, I'm interested to maybe start with your own career. You had a highly successful career in DCC and you decided to make a change.
That's right, yes.
And together with some partners, you set up Erisbeg. Can you tell me about the driver for that and what came next?
Well, I guess, David, I was 18 years in DCC PLC, and there were like 18 fabulous years, and I had huge experience of a variety of roles in there. I was involved in the food division, the energy division, and latterly I looked after the environmental division in there. And I guess there was something particularly unique about DCC, and that was, I guess, it was the culture that Jim Flavin created, and there was an enormous respect for entrepreneurs in that organisation, and that resulted in, like, there's many entrepreneurs who developed really successful businesses, went into DCC, and actually probably stayed with DCC much longer than they ever anticipated initially when they did the transaction. And that was as a result of the huge respect that was shown to entrepreneurs. And I guess what I really enjoyed doing in DCC was supporting business owners to continue running those businesses as part of a much larger corporate organisation. And I guess over time I learned that maybe just I had a bit of a flair for that and building these relationships. But spending so much time with entrepreneurs, I guess I had a yearning to do something more entrepreneurial myself.
Yeah.
So I guess a turning point came for me that DCC made a strategic decision to sell the environmental division. That was ultimately a very successful process with Exponent, the London private equity firm, buying the division. And I guess at that point, I wanted to be fully committed to whatever I was doing. And it was either going into another division, and I guess I was in my mid-40s and starting again with that division. So I guess I was going to end up retiring from the organisation or doing something more entrepreneurial myself. Having spent so much time with these entrepreneurs, I just had a yearning to do something that a bit more entrepreneurial. So at the back end of 2016, I decided it was now or never. So I took that jump.
And before we go on to what came next, I am interested in that idea, an organisation so large and so successful like DCC. How did they manage to keep flaming the entrepreneurial spirit rather than, you hear large organisations sometimes aren't really a hotbed of entrepreneurial spirit?
Well, I guess there was the appropriate governance procedures and process was in place in DCC, but it absolutely wasn't a bureaucracy. And they were very conscious of that and giving business owners or guys who had been business owners in their own right the space to continue doing what they were brilliant at doing. And it was that, I suppose, entrepreneurial culture or flame just kept on being ignited in the organisation.
Well, it's been very successful.
It's been hugely successful.
I'm always interested in Erisbeg that you're maybe a little bit different to other funds. Yourself and the other partners don't all, you don't all come from the industry per se. Can you tell me a bit about how the four of you got together and formed Erisbeg?
So I guess we're in KPMG today. My background is I was an accountant myself. I trained in PricewaterhouseCoopers, and I did the BCom in UCD and then went on and did the Masters. Which a lot of people in this organisation did. But in terms of doing the BCom and the Masters, I became very good friends in college with a guy, Alan Kerr. And Alan went down, and he also did the accounting route, but he joined EY. And it's an interesting story. So Alan was a really entrepreneurial guy. He was setting up his own IT business on the side while he was in college, etc.
Wow.
But he actually went down the credit route and ended up in a business called Harbour Master. And that business flourished, was very successful. And then Blackstone, the big international firm, acquired that business. And Alan and I, whilst we went on different paths, as it were, we were constantly tic-tacking and keeping in touch. We were good friends. And I guess Alan was doing a very international role. I was more in Britain and Ireland within DCC.
Yeah.
And over that time, we used to be just chatting over dinner, etc. And I'd be saying, Alan, there's a lot of opportunity in the SME space. And rightly or wrongly, I thought maybe it's not as penetrated from an investment firm's perspective as maybe some of other international jurisdictions.
Yeah.
And just huge number of, as I mentioned, great SME businesses. And I think there's just a real entrepreneurial culture in Ireland. And then the huge FDI investment over many years into Ireland has meant it kind of spawned a huge ecosystem of companies that are supporting these FDI businesses. And also a particular dynamic which I saw in DCC and is out there in terms of people create businesses, really successful businesses.
Yeah.
But in terms of next generation, I thought from a succession perspective, it was an interesting opportunity. And I've been throwing that idea around with Alan for a period of time.
Yeah.
And then I left DCC, as I mentioned, the back end of 2016. And interestingly, then early 2017, Alan reached out to me and said, do you want to meet up?
Yeah.
And I guess our conversations, but I didn't really know that Alan was kind of itching to do something a bit different himself at that point in terms of timelines. But Alan was explaining that effectively he was doing a very international role, for want of a better description, a London role.
Yeah.
He had young kids, was travelling a huge amount, and decided, something was going to give.
Yeah.
So he decided it was a good time to try something else himself.
Yeah.
And I said, well, we've been talking about these ideas, let's go for it. And it was as a result of that we founded Erisbeg in early 2017.
Right, okay, yeah.
So in terms of the partner body, as it were, the partner group, it's interesting in terms of, there's Robert and Andrew.
Yeah.
And Robert joined in 2018.
We should point out he did train in KPMG.
He did indeed, absolutely, yeah. So he's the third of the four in terms of three accountants. And Robert trained in KPMG, and Robert had somewhat similar career progression as I did. He was in 151 while I was in DCC, and then 151 had evolved, and Robert was looking to do something maybe different, and our paths had crossed previously. So I explained to Robert what Alan and I were doing in Erisbeg, and Robert thought that was interesting, and Robert joined in 2018.
Right.
And then a slightly peculiar story, but my path then crossed with Andrew. And Andrew is very proudly the non-accountant of the four of us. And he's a very interesting background. Andrew's a chemical engineer, and at a very young age was running the Henkel Loctite facility in Tala and introduced an awful lot of technology in there. And then Andrew did an MBA. As a result of that, an introduction, he actually founded a technology business in the healthcare space, and he sold that to US private equity. And our paths crossed. I introduced Andrew to Robert and Alan, and then he was doing a little bit of work with us, looking at opportunities in 2018, but Andrew formally joined us in 2019.
Yeah.
So I guess it's a very long-winded, answer is that our backgrounds are a bit different to maybe our peers. We don't have corporate finance backgrounds, We've either been entrepreneurs ourselves or spent all our careers really working alongside entrepreneurs and supporting those guys.
It's like the narrative or the story behind putting a band together, and it does. When you meet the four of you and you meet you together, it does click. There's a definite chemistry, and it very much has that vibe. So you started about making investments before you raised a fund.
Yeah.
With, I guess, amongst yourselves and with some others. How did that evolve, and how did you decide what type of deals to target?
Well, I guess in terms of the very early days, it was all of us using our networks and being introduced to businesses. And I guess in terms of the first business that came out of that process was BP Multipage.
Yeah.
And that was our first transaction. And we completed that in 2017.
Right, okay.
And it's interesting, each of us kind of then, Robert, as I mentioned, joined in 2018. It was actually a connection that he had They introduced the food safety company to us.
Okay.
And we did that in 2018. And then in 2019, we did Medray, which is imaging equipment business. And that was actually a connection that Andrew had.
Yeah.
And there was a corporate finance boutique that had the mandate for that business. And one of the partners in there was actually did a business course with Andrew.
All right.
So we were given an opportunity to look at that business. You know, so I suppose in terms of coming across opportunities, it's all about always leveraging our network. And the interesting thing is that those businesses came from our network. But once we do transactions, you know, the business owners are all well networked themselves. So lots of new opportunities come from their relationships, be it in the space those businesses are actually operating themselves or just in the wider, I suppose, arena of business owners and the network that they
And I believe some of those business owners now co-invest with you on other deals and so on. So it was a great thing to see.
Yeah.
And so you touched on Medray there. So a successful exit recently.
Yes,
so congratulations.
Thank you very much.
Can you maybe give us some insight of that journey, that you know, the business you bought into and the developments along the way, and then the exit?
Okay, and I guess Medray is an interesting case study because I talked about we're a little bit different and what we bring to transactions. In that, if someone wants a completely silent investor, we're not the right investor for them. You know, we want to roll our sleeves up with huge respect for the business, people running the business, but where we can bring a bit of support, we absolutely want to do that.
Yeah.
So the Medray story in particular, that, as I mentioned, we came across the business in 2019. The interesting thing about that business was, well, maybe to start off what the business did. The business had an agency for X-ray machines into the Irish market. The principal was a North American business called Carestream. And what they were doing was they were selling X-ray machines into the Irish hospital market, but from our perspective was particularly attractive long-term recurring service revenue related to the sale of those machines. Yeah. So just say if a machine had a lifespan of maybe 10 years, there's a warranty period, and then you were looking after those machines for the 10-year lifespan. Yeah. But it wasn't a huge business. It was making a little bit less than $1 million EBITDA at that point. But what was really attractive was in our early engagement with the owners of the business, it became apparent there was an opportunity to internationalize this business. Yeah. And what was happening was that Carestream, as I mentioned, their strategy was that they went direct in the larger markets and used distributors such as Medray
in smaller markets like Ireland.
Yeah, exactly. Yeah. But they were revisiting that strategy, and there was an opportunity to enter the UK market through them. Okay. So we did the transaction. We signed for it in December 2019, and then in January 2020, we actually agreed heads of terms with the Americans to buy that business. Okay.
Yeah, to buy the UK business.
Buy the UK business.
Okay, because then $1 million EBITDA, very much the lower end of your investment range. Yeah. So
well, not necessarily at that point. We've evolved a little bit, maybe a little bit larger deals, but in terms of, it wasn't a huge transaction at that point. So, but we thought the UK opportunity was really exciting, and then it's kind of bizarre, funny story in terms of we were doing our diligence on it, etc. And then there was these, I suppose, clouds on the horizon, particularly in Italy at that point, in terms of the coronavirus had arrived. And as we were getting closer and closer to completing this transaction, those clouds were getting, I suppose, stormier and stormier as we got closer.
Yeah, regrettably so.
So I remember very clearly that, you know, we decided that we were going to do the transaction. And at that time, my son was actually in transition year. I was spending some time in Switzerland. Right. And on the 13th of March, in the morning, we signed the transaction to do the Carestream transaction. And in the afternoon, I was organising flights to get him in a hurry back to Ireland, and he flew back the next day. Yeah. So we did that transaction. But the interesting thing about it, I was talking about, you know, a somewhat different operational skill set that we have in that transaction was the opportunity was very apparent to us that there was very little systems or back office coming across because it was a carve out from the multinational. So in the face of COVID, we actually created our own back office for the business.
Oh gosh. And when you say hands-on, that's hands-on.
That was hands-on, so, you know, and we did that, and we actually because a lot of the back office for the business historically was operating in Bucharest, we even created a temporary back office in Bucharest while we created the back office in Britain. We expanded the range of services that Medray were providing in both the Irish market and the UK market. So we went into dental, went into veterinary products, and we then did a very interesting transaction called Avista Medical, and that brought us into the whole area of MRI, etc. And I guess, like, we took this business sub $1 million, moved it to multiples of millions in terms of scale, and then we kind of felt, it was the right time, to give someone else the opportunity to bring on to another level.
And that we talk about this a lot when we do these interviews, was the the four of you in Erisbeg around the table? Was it the management team? Was it everyone together? How did you arrive at that decision point that actually the journey had reached the point that maybe a transaction was the right thing to do?
No, I think we pride ourselves on being collegiate and working in partnership with the business managers. So it really was a joint decision with ourselves and Siobhan Crowley, who's the managing director of that business, that now was the right time for us to do a transaction.
Has Siobhan remained with the business?
Yeah, so Siobhan's remained with the business. That the UK mid-market firm LDC, they acquired that business. And they're really excited about the opportunity to continue to support Siobhan, but Siobhan's very much at the fore. She's the managing director of that business, and we'll bring it on to the next level, be it internationalisation into continental Europe as an example.
Yeah, and I know, look, lots of factors around the nature of offers and so on come into this, but the decision that it would be another private equity firm to take the business forward as opposed to trade or another type of buyer, can you maybe expand on that a little and what the considerations were?
Well, I guess, like, we went out to market with the business, and we got offers from both trade and private equity. And weighing up those offers, between ourselves and Siobhan, and the opportunity for both Siobhan and her senior management team, to continue to build this business, to create their own, I suppose, value, that thought was a very exciting opportunity. And the best offers we felt in the round were from private equity, and in particular LDC. Yeah,
that is one of the things that come from these conversations, just the amount of opportunity it creates for management teams, opportunity to be shareholders in business and have that alignment and so on, but also the voice that, it's as involved as a financial investor might be, you're not running the business.
No, absolutely.
You need management to ultimately get another investor interested in the business.
No, 100%. And that's why it's really important in terms of, the mutual respect that we're all bringing something different to the table. But it's hugely important that we recognise who knows the industry and who's running the business, and allow them the space to continue doing what they've done historically very successfully.
So a great success story with Medray. Is that the typical Erisbeg deal? Is that the template, or maybe can you expand a little bit in terms of what type of deals you're looking for?
The type of deal that we're looking for is, we're not venture, so we want established businesses. We're looking for great businesses that have achieved an awful lot already, and maybe the owner of the business is, in a lot of cases, all their own personal wealth is tied up in this vehicle. And the perfect transaction in many ways from our perspective is where they want to take some value off the table, but maybe they want to stay with the business. And whilst it's performed very well up to that point, maybe when they de-risk a little bit, in terms of pressing the accelerator a bit harder, and hopefully to some value we can bring to that. So in particular, we pride ourselves on, having a special expertise in buy and build. So taking a business, and there's lots of businesses out there that have grown very successfully, but maybe acquisitions isn't something they've done, and maybe they're a little bit cautious because it's a new world for them that they don't have experience in, and that we can support them on that, be it either in the Irish market or internationally, to internationalise the businesses.
So let's dig into that a little. How does that manifest? Is that you guys coming with a list of 20 targets and going yes, no with the management team, and then going out and contacting people, or how do you go about identifying the right acquisition?
Well, in many cases, that in the transactions we do, the business owners will know their market very well already.
I'm sure.
And they'll point us in the direction of some interesting transactions. So in Medray, we did, I think, 5 or 6 bolt-ons. A lot of those transactions actually came from Siobhan in terms of her network in there. Yeah. And then there's businesses that we know ourselves just from, I suppose, our network. And then there is, I suppose, our network in terms of corporate finance advisors. Yeah. And people like yourself are bringing offers to us. So just say a good example is Dixon. Yeah. And after the Dixon transaction, we acquired the Carna business.
Yeah, so Dixon's is a logistics business you guys have invested into.
Yeah, we invested in that business, and we weren't actually in the business that long. And one of your peers approached myself actually and said, I have an interesting business in the space. Would Dixon be interested in doing a transaction? Yeah. And they explained who it was. We obviously had the NDAs, etc. And that's how the Carna transaction came about.
I am always saying that the private equity investment or private equity transaction can actually be a catalyst. It puts you in the it's the opposite to the shop window. It puts you in the buyer's lounge. That all of a sudden companies that may not have been approached as an acquirer start getting inbound from businesses that are on the market or businesses that are thinking about it. Yeah. And do you find that it can create its own velocity, its own?
I think that's absolutely right. 100%. So it's interesting. Another example is we bought Olus, the IT contracting business in the Irish market, and very quickly after that transaction, we internationalised that business with a transaction in the UK, Fruition. And that kind of self-perpetuating momentum, as you described it, and from that there was a bit of publicity about the Fruition transaction, and that's opened some doors for other transactions. And it's interesting, not even necessarily in that space, but in the broader arena of things that might be interesting from an Erisbeg perspective.
Which obviously creates a lot of excitement for the team as well. Yeah. I'm interested, Thomas, having such a variety of business experience as you're getting information memorandums from people like me, or you're meeting companies, and so on. Are there common trends that you're seeing in businesses before and after investment that maybe where they need to be strengthened, where they can improve?
There's no particular rule of thumb. So in terms of each business is unique, and I guess one of the things that's hugely important that you give the business, the owners and the business itself, the respect that there isn't just one solution that solves any particular challenge in any business, Yeah. So in some cases, the finance function is an example. And the finance function may well be adequate for the scale of business, but if you want to push to accelerate that bit harder and do transactions, etc., maybe it needs a bit more weight as an example. And,
if you're going to do 5 bolt-ons, that's different to business as usual.
No, absolutely. So be it, like just say in Medray, we brought in a CFO, COO into that business, and that worked well from the Medray perspective. But then there's other businesses you acquire, and in that space, they have a really, really strong finance function. But maybe there's an opportunity in terms of an operational officer, as an example, to bring them into the business to strengthen it.
So come open-minded?
Come open-minded, absolutely. Yeah.
I think I could ask you questions all morning, but one thing I probably do want to ask is we've been through we've come through a funny market. 2022 coming out of COVID was a very, very active M&A market. It's felt for the last year or so, maybe the market's been a little bit uncertain. What's your own take on the market at the moment, and as we come towards the end of 2024 and into 2025?
I'd be optimistic looking forward about the market. That's interesting, actually. I think, obviously, you know just as well as I would, or even better, David, that the UK market really slowed right down. Whereas the Irish market, I think, slowed a little bit down.
It's been quite resilient.
But it kept on going. It's pretty resilient. Yeah. And the sense I have is that there's a huge number of great businesses out there. And, excuse me, if some businesses, press the pause button for a short while, they're still there and they still want to do the transactions. And I see a very solid recovery coming forward, albeit there wasn't
we didn't have a
too
cliff.
big. No, there's no cliff, exactly.
Yeah. Thomas, it's been really interesting. I've heard a lot about respect. I've heard a lot about just open-mindedness and getting the sleeves rolled up and getting really stuck into business. It's been a very, very interesting conversation. Thank you very much for joining us.
No, thank you very much, Dave, for having me.